The S&P 500 touched 5-year highs again today, even as Apple shares tumbled. Now, Doreen, the S&P 500 also managed to cross the 1,500 level today. What does that mean to you? Is that a psychologically important mark to you?
Well, I think it is for everybody. You know, I think 1,500 was the target. See if we could get there this year, and we've gotten there early in the year. It's crossed it, several times today, I think. But I don't think you can question the momentum of this market. You know, Apple earnings were not what they were expected to be. That stock took a hard hit, but the market doesn't seem to be too worried about it. I don't know.
So the market looks like it wants to keep moving higher. How much longer can it sustain this momentum? What would happen if the Fed stimulus chatter begins to wind down?
Well, I think we're divided into two camps on that, and they're both very polarized. There are the people that feel that we are poised right now to really take off into a huge new secular bull market, which would be nice, and there are others that feel that we're due for a pullback. There doesn't seem to be much thought that we're going to stay around these levels. I mean, people seem to feel it's either going to go one way or the other. I personally feel that we're going to do a little bit of consolidation here and then probably move higher, barring any bad news out of Europe or someplace, China. United States seems pretty stable. Our economic data has been good. There's a lot of money sitting on the sidelines that everybody's been talking about. We've talked about that, you and I ourselves. And I think you're seeing some of that money going to work in the first month of the year. So I think that probably people are confident enough to get back in the market, not completely. So you'll see it, in tranches coming back in. And that'll probably give us a pretty good floor.
And heading into the FOMC meeting next week, what do you think are the catalysts or the catalysts that could bring the markets down a notch or push it up to the next level?
Well, I don't think that the Federal Reserve is going to change their policy. I think that they're going to stay pretty much willing to be at the ready to keep us stable. That's for sure. I think that we do have the idea that Mr. Bernanke feels, they've done what they can do, and we're going to have to sort of go with that for a while. But I think that they're going to keep interest rates low through the end of the year. And I think that will provide the stimulus for housing and for a lot of different things. But knowing that the Fed is there, obviously, whether we agree with it or not, has given the market some confidence.
And tomorrow we've got some new home sales data, and we're expected to see another month of improvement there. How much impact will that have on the markets tomorrow?
Well, I mean, I think there are two things that we look at all the time to convey to us what kind of confidence we have in the market. Obviously, housing is one of them, and the jobs market is the other. We got good news today on the unemployment figures, and if we get good news tomorrow on the housing numbers, then I think you're going to... the signal certainly is stronger that people are feeling better about the economy. If they're feeling better about the economy, well, they're going to spend more money. If they do that, we're going to see an improvement in GDP. So,
thanks, Doreen. This is Andrea Say reporting for The Street.